In this video, I will explain to you one enterprise acquiring another enterprise and liquidating it and buying off the assets. And the other scenario is one enterprise acquiring the ownership of the other enterprise as a going concern, where it is subjected to business combination. So let's take the first scenario. John is one enterprise and the other enterprise is Sarah. And Sarah has a land and it's $1,000, and the net assets is equal to $1,000, and that is supported by equity $1,000, and the total equity is $1,000. In John's situation, there's cash worth of $1,000, and that's supported with net assets of $1,000, and this $1,000 is supported with equity $1,000 and $1,000 equity. So let's take the scenario where now John acquires the Sarah's enterprise, and it acquires the land. So then John is the only enterprise that's remaining, and John is acquiring the land, and that's $1,000, and there's no cash because it used up the cash to acquire it, and the net assets is $1,000 and supported with equity because John acquired the land of Sarah and used the cash to pay off Sarah, and Sarah took cash and went away. So this is where there is acquisition. So there's acquisition, and then the Sarah's enterprise has been liquidated. John is here, is acquiring Sarah's entity, but when it acquires Sarah's entity, John acquires Sarah's entity, and John acquires the ownership of Sarah's entity. So Sarah got the land of $1,000 and John got cash of $1,000, and there's no cash here, and the net asset value is $1,000. In both situations, it's $1,000, and the equity is John's equity is $1,000 and Sarah's equity is $1,000. This is the original position. Now John acquires Sarah's entity, but John acquires the ownership of Sarah. So John is using this cash to take ownership of Sarah, and because of that, John's cash now decreases to zero, but John will make investment in Sarah, and that's $1,000, Sarah's ownership. So John's net asset position is $1,000 and the equity is $1,000. Sarah's situation, it is Sarah still got the land here, which is $1,000, and because it's ongoing concern still there, and there is equity of 1000, but this equity which was previously owned by Sarah is now owned by John. So it's John's equity now. So now let's look at of combining the two entities, because John is now owning Sarah's enterprise 100% because he bought it. So here's John's group. So we can now combine the two entities. When we combine the two entities, Sarah got the land here, and that's $1,000. This investment that's made in Sarah is for the land. The investment made in Sarah is for the land. So we can't show this investment again because it's about the land. So if you show it again, that means there are two pieces of land, one with the investment showing the land value and then the real land. So that can't be the situation. So what John owns is $1,000, the original position here, but this 1,000 cash is now used up to take ownership of the land. And John's original position is 1,000 of equity, and this ownership is for the land now is $1,000. But John used this investment in the ownership of Sarah to take ownership of the land. So this investment is showing the ownership here. So to come to this position, we have to do a consolidation journal entry. So debit Sarah's equity, but it is actually John's ownership, which is $1,000, and credit investment in Sarah is again John's ownership, $1,000. So once we have done that, our position is $1,000 in $1,000. But in this position, what we did was we did a journal entry of debit land of $1,000 and credit cash of $1,000. So that position of acquiring an entity, enterprise, versus taking ownership of the enterprise and combining them, the journal entries are quite different. Whereas here, the direct ownership is shown with a reduction in cash. Here, there is no, the cash is being replaced with the land ownership as a going concern. So that cash decrease is now shown, is not shown here because the cash decrease is now replaced with the land ownership group accounting situation. We are not showing the acquisition of the land, but instead we are showing that we have taken control of the land. We have taken the control of the land, and therefore we can't show an acquisition of the land, but instead what we have shown is the land is being controlled through the ownership, and land has not been acquired through cash. So that brings us to the end of the video. I'm Professor Indra Besekara.